Hello, this video is about the tax lien on my house. Help! Yes, you can sell your house and can even refinance your mortgage with a federal tax lien on it. And this video is here to show you how. Who we are first, we're a Georgia tax defense firm. We don't prepare your taxes. What we do is we deal with the IRS for you when the IRS says you owe them money. So the question comes up, I would like to sell my house, but there's a tax lien on it. What can I do? Working with tax liens in a home is a common issue. You should know the IRS does not want your home. The IRS does not want to hold your home hostage. What the IRS wants is the money that they say you owe them. Putting a lien on your home is a means to scare a person so that they penny up to the IRS. A lien on your home will hit your credit report, hurting your credit probably by about over 100 points. But nevertheless, even the IRS knows you can't squeeze blood from a turnip, and the IRS cannot manufacture equity in a home where none exists. So it is possible to deal with the IRS to allow the sale of your home to go through, even if there is not enough equity in it to satisfy the lien. So first you have to understand, what is the IRS tax lien on your home? First, the tax lien to the IRS arises as a matter of law as soon as the IRS assesses a tax deficit. It actually attaches not only to your home, but to all future property as well. However, the IRS does not have an enforceable lien against you until it actually files a lien on your home with the state of Georgia and the county recorder's office within the county of where your home is. Once this is done, any liens in your home, like a mortgage, a home equity line, that were made prior in time will still have priority over the IRS's lien. But the IRS's lien will then have priority over later filed liens. Thus, the IRS has to wait in line like everyone else. What this means is the big bad IRS does not get to move to the front of the line. When the house is sold, the money from the proceeds from the house first have to go to settle the mortgage, home equity line, and other liens that were filed prior to the IRS filing their lien. Then and only then, after paying for the closing costs in the house as well, like the real estate commission, does the IRS get to jump in and get money. One of the first questions asked when the IRS puts a lien in your house is, will the IRS foreclose on my home? Like any other lien in your home, foreclosure is possible. The IRS certainly can foreclose on your home. However, it is not a small process. IRS foreclosure on your home means a referral to the Department of Justice and an actual lawsuit filed to foreclose. The IRS reserves this sort of treatment only to larger tax deficits and in special circumstances. Thus, no, it is not likely that the IRS will move to foreclose on your home. Instead, the IRS will be patient, continue charging interest and penalties to you unless we can work this out, which is a separate topic, and that is one of the things that we are retained to do more often than not. And they will wait it out and try to get their money. So you have an IRS lien in your home. How can I sell it? You sell your home by working with the IRS. As we stated earlier, the IRS wants the money you owe, not your house. There are 3 different scenarios that exist when you want to sell your house with a tax lien on it. Each scenario assumes that you are satisfied that the lien amount is correct that the IRS put in your house, or it has otherwise been worked out to the best result that can be obtained under the rules and formulas of the IRS working through your attorney. But that's another topic. Scenario 1 is the easiest one. That's full pay. That means after you pay off all the prior filed liens, which is most likely the mortgage and the home equity lien, and after cost of sales, such as the real estate broker's commission, there is enough money left over to pay off the entire tax lien. In such cases, at the closing, arrange for a certified check to be payable to the IRS to obtain release of the lien, then go on with your life. If there are still back taxes owed, even after the house is sold, it may be a good time to work them out with the IRS in either a payment plan, offer a compromise, or even put it into uncollectible status. The reason for this is the IRS no longer has a lien on you, and you're much more difficult to collect on now. It is a very good time to try to work things out. Scenario 2 is partial pay. This is the most complicated of the scenarios because, like you, the IRS does not want to be taken. In this scenario, after paying off the mortgage and the other earlier filed liens and the cost of sale, there is enough money to partially pay the tax lien. And the IRS still wants their money, whether they can get part of their money or all of their money. The problem is they want to make sure that you're not ripping them off. So it takes time and you have to work with the IRS. Specifically, what you need to do, as soon as there is a buyer and a contract on the home, you need to contact the tax attorney, and the tax attorney will work with the IRS Technical Advisory Unit. This process can take weeks. That's why you need to immediately contact the attorney. And basically what we're doing is proving up to the IRS that this sale is on the up and up. It's not a straw man transaction trying to wiggle your way out of the lien. It's being sold for a fair market price. The IRS is not getting ripped off and the like. Upon working it out and receive a certified check of the amount that we have worked out with the IRS will release the lien on the home, and you can sell the home. Whatever they get will be offset against whatever taxes you owed, and the remaining portion of the taxes you owed you may be able to work out, or it may just remain the way it is depending on the circumstances. Scenario 3 is the short sale or no pay. There simply will not be any equity left in the home to pay the IRS a single dime when the sale is over with. This scenario is similar to the partial pay scenario we just discussed. The IRS does not want to get ripped off, but if no dollars, there is no dollars. The IRS understands you can't get blood from a turnip. You need to contact the tax attorney to work this out with the IRS to provide a lien release. Under such circumstances, it may also be a very good time to work out the taxes owed with an alternative plan and offer a compromise, or have yourself collected as uncollectible so the IRS stops trying to collect on you. The IRS may be very receptive this time to get something out of this deal. You can see you cannot get blood out of a turnip even with a screw vise. But yeah, this can be worked out with the IRS to allow the sale. So the lien will not prevent the sale of your home as long as we properly work it out with the IRS. The same sort of circumstance applies to refinance of a mortgage. Similar issues exist with refinancing of a mortgage. A bank is probably not going to refinance the mortgage for you or give you out an equity loan on your property if there's a tax lien on it. However, sometimes it actually is in the IRS's interest to do so if an arrangement can be worked out between the IRS and the taxpayer. Why is this? Because refinancing a property can raise money for the taxpayer to help pay the taxes. It can reduce the taxpayer's other expenses to help release money that can be paid for taxes and make it easier for the taxpayer to pay at least some of his taxes. So yeah, the IRS will sometimes allow you to even refinance a mortgage, and they will release their lien to enable you to do that as long as we can come to an arrangement on paying the taxes or a portion of the taxes, or that you are currently uncollectible, but it needs to be worked out. So if you have any questions, feel free to contact us. This is Scott Shaw. I'm the founder of the Shaw Law Firm. We are tax attorneys. We defend you against the IRS when you owe taxes. Thank you.